Good afternoon, everyone. Welcome back to Sidoti's Virtual Investor Conference. I think we have an exciting conversation for the next half hour for you as we wrap up day one of the conference. Before we kick things off, I'd like to remind everyone that throughout the conversation, we can also welcome questions from investors. You see that Q&A button at the bottom of your screen. Press the button, type in your questions, and I'll get to as many questions as I can as the conversation goes along. With that said, I'm so pleased to be joined by Titan International, the ticker's TWI, President and CEO Paul Reitz. Paul, thanks so much for being here today.
Thank you, Steve. Really appreciate the opportunity.
Um, Before we get into some Q&A, for people who are new to the story, you want to give a brief overview of what Titan's all about?
Sure. Yeah, we're proud to operate a niche where we make off-road equipment move. So when you think of off-road equipment, think of the big and the obvious, the large John Deere equipment, the big Caterpillar equipment, but then also expand your horizons and think all the way down to an ATV, a golf cart, or not a golf cart, but a golf cart turf equipment, and also the high speed trailers you see on the road. But we make the wheels and the tires and the undercarriage that propel that equipment on the path that they're moving, and we're really proud of the niche we've occupied. We've been doing it for a long time. Company's about 4 decades old, been public for about the last 30 years. And, again, I think with that, you gain a lot of expertise and knowledge that makes the equipment that we produce much more than just that. We make equipment perform better.
Excellent. You break it out into three segments. The one people probably talk about the most and ask you about the most is your ag segment.
Mm-hmm.
It's been through a couple of challenging years. On the most recent earnings call, there were some signs of optimism supported by clearly improving farmer sentiment, expectations of better farmer income this year. If you can walk through, what are the better signs for us that the market really can recover, and can we see that as early as this year?
Yeah, I'm gonna talk at a higher level, Steve, with that, and then dive down a little deeper. But
Yeah,
like you said, I mean, we if you divide our business up, and we're more of an ag company than we are the other two segments, but not by much. I mean, we are a
yeah,
consumer based company. We do a lot of business with earth moving construction as well. But our culture, our roots, and our DNA is really in agriculture. And so, with that, as I kind of assess the ag market, a lot of the good feelings we get are just from within our team. You think about the last, let's call it year and a half. It's been a tough road for ag. Declining farmer income, too much inventory, and both in the OEMs and the dealer level. And with that, my team has been feeling that. And what I have noticed over the last few months, kind of starting back in December as we're making our plans for this year, is that they're starting to see things improve. So feeling like there's a bottom, but also
yeah.
feeling like we're pushing ourselves off that bottom. And so part of where I make my comments is at that high level where my team is different. The optimism's there, the confidence is there, and that means a lot. That's not just superficial words. Are those orders? I've been asked that. Are they orders you can take to the bank? Well, at this point, we all heard from Jerome Powell this morning. I mean, forecasts in the short run are impossible to do with any type of accuracy.
Yes.
But long-term conditions, we do feel good, and I've noticed a significant change. We are seeing some customers start to place more orders. That is happening along with it.
Okay.
Is it across the board? Not at this point, but yes, there are customers who are saying, "Look, we've depleted our personal inventory too far. Maybe the market conditions are not indicating higher demand, but we know we got to build our inventory back up," and we're seeing those orders starting to come back in. So for Titan, I look at the agriculture side of our business, and North America specifically has been at really a low period the last few years. Again, market conditions plus really getting the inventory levels corrected. And so I feel like we're in a good position to grow from there. Along with that, we are seeing farmer income levels increase, due to crop prices, but also which is current, short term, immediate, but also long term. We know the government support
Yeah.
situation is different than it has been in the past, and so I think the crop prices have a better floor now than they did last year at this time, and we're going to see that come through in farmer income. I was talking with my Brazilian team this morning. We're seeing the Brazil situation start to get better with more direct orders coming in, where
Okay.
dealer and OEM inventories need to start getting replenished, and so answer your question, probably varies by geography, but a high level,
Yeah.
we are thinking the optimism is better, both internally and externally, and that can be supported by what my team is feeling, but also by farmer income, inventory levels, and some characteristics that you can put your hands on.
So why don't we just go through the segments? Can we touch on earth moving and construction, which is a little bifurcated for your company? You have the undercarriage business, which really drives Europe, but then you also have EMC in the US. Can you talk about the factors that move the needle one way or the other for that segment?
Yeah, no, definitely. I mean, it's we look at two primary things. I mean, you got non-resi, which is going to be supported by business activity, but also heavily supported by government infrastructure investment. And then for us, we do have a healthy mining aftermarket business. So
Yeah.
if you look at our construction, look at most of our undercarriage business is going to be driven towards the OEM, but we do have a really good uh, foundry based business for undercarriage that can service the aftermarket, and so that's going to be driven by more on activity within the mining segment. And so we're seeing more positive things as far as activity goes within mining. OEMs, similar to ag, it kind of varies and depends on the day and the question of who you ask. I do think all of us can feel that there is a floor in the construction infrastructure spending levels. Meaning, if you're a
Yeah.
politician and you decide to ignore that, I'm not sure how long your career is going to last. So, while the short term may be hard to predict, I do think that the long term fundamentals are there. So, we're seeing a business there that's been more stable. I think part of what we've seen in ag is a reaction to the overreaction on demand, whereas
Okay.
construction and earth moving hasn't had that overreaction. And so, more stability in the short term. I think it's difficult to predict, to understand,
Yeah.
trying to understand where governments are going to invest and
Well,
where businesses are going to invest. But, our business does have a good, stable diversity level because of that foundry and that aftermarket
right.
business that we have with the mining.
Okay. And then the third piece, and for folks who maybe haven't checked in on Titan in over a year, the consumer business is,
Yeah.
I mean, you can argue transformed a year ago with the significant Carl Star acquisition. Can you talk a little bit about what Carl Star has added and how that business is really different for you now?
Yeah, I mean, it's a good point, Steve, for us because it's transformed us is a good way to put it. I'm going to use your words, so it's
Yeah.
what I like to use as well. Is that it's transformed us to where we can become a one-stop shop. If
Yeah.
you think about what we just talked about with agriculture, so small to large agriculture, we have that covered. We touched on earth moving construction, and we have a good undercarriage business there. But the consumer side of the industry, we really hadn't played much in, and so through the acquisition we do with Carlstar, all of a sudden we're looking around going, Carlstar had a tremendous distribution footprint in the segments they served. Really strong market share, really strong brand recognition, but on top of it, great distribution and connections to the marketplace. Same things that we really enjoyed in agriculture and earth moving construction, but they really deployed it through a one-stop shop mechanism where if you needed something, they got it. And so we're really working to bring that into more of our business, especially agriculture, where in the aftermarket for agriculture, we feel good about the business that we've grown and established with LSW, our connection to the end users and the farmers. But all of a sudden now we're going, wait a minute. If we can be that, when we are that one-stop shop, which we are quickly becoming, we can do anything for anybody, from the smallest stuff.
Yeah.
You talk about turf maintenance equipment to utility vehicles, all the way up to combines and 500 horsepower tractors. And I go, Titan needs to be able to service those customers wherever they're at, whenever they need something. And so that premise that they've established with that one stop shop is something that's ignited a nice culture change within Titan. And
Okay.
I think there's a lot of positives we're going to get from it, on top of acquiring a strong business. I will say, fundamentally, they have a good business. They had a good business. They built a good business. We've taken that, done really well with it over the last year. But on top of it, like I was saying, we see some ways where we can continue to grow and expand the one-stop shop, the ability to take our brand and that distribution footprint and combine it with global manufacturing, including some manufacturers that are not necessarily in our umbrella. We look at the world as our plants that we own and operate, the plants that we have some good joint venture partners with, and then those plants and operators that we have a brand, we have a distribution platform that can add value to them that they don't necessarily have the ability to create. And so we're looking at this one-stop shop is really taking on a full meaning of connecting to the customer, but also us connecting to anywhere we can produce that product. And that, again, that can be in different forms, as I just illustrated.
That's interesting because I rarely hear that in acquisitions, right? Usually it's the acquirer that's going to improve the acquisition. It sounds like you're actually learning things from the business you acquired, which is not something you hear a lot.
I mean, it's sometimes you've got to check your ego at the door. And that's what I think a Titan team has done a good job with. We've learned internally through the years of doing acquisitions at Titan. I think it's something our management team as well has seen acquisitions in the past at prior companies. And right from the beginning, we said to the Carl Star team, we're here to learn and build together. And that means we got to open our eyes and ears to what you're doing as well. And I think we've done a good job with that. And a year into it now, I can feel very confident to say I don't think we're doing a good job. We are doing a good job, and we're seeing the teams come together in ways where whatever the better situation is, we need to do it. But I got to give the Titan team a lot of credit for that. I mean, culturally, you have to check your ego at the door. You have to be willing to say, I think I can learn from what they're doing. I better learn from what they're doing. And so we've done an excellent job with that. And so the opportunities for growth, especially as the markets get better, that's where we're sitting together as a team going, boy, we really like where we're situated today.
When you made that acquisition, you talked about synergies of 25 to 30 million annualized. Can you talk about the progress through the integration and where there's room to go?
Yeah, I think that's always the fundamental you got to have when you present an acquisition to the board of directors and to investors is that can you get some synergies, and we're delivering on that. David Martin and the team have done a really good job focusing on where we can do the obvious, which is cut costs. There's always some obvious cost cutting, and we've been able to achieve that. Moving quickly into the supply chain benefits. So that's not just cost cutting, but that's the supply chain benefits where you can look at the buying power you have of the two combined companies. We're seeing that come together very nicely. And, kind of the third step along the way is what I was getting into with the one-stop shop
Yep.
is also towards the future of the commercial synergies. I mean, we are now important to the marketplace. We're important to our customers. There's a lot of value that we're starting to see our customers express to us, meaning you got to be careful with how I say that because I don't want to leave the wrong impression. There was not a lot of overlap or cannibalization with our sales,
Right.
but because the products were different
Yeah.
and the geographies were different, but there were some common customers that we now
Okay.
have a better, stronger relationship because that relationship has grown even deeper than it was
Okay.
before. So I just want to make sure everybody's clear on that. The cannibalization was minimal across the two companies, but it's the commercial
Yeah.
synergies. Again, that's aftermarket and OEM. I don't want to make it seem like it's just OEM. There's also a lot of aftermarket customers who are buying a significant amount of products because of the strength we had with our products, our distribution, our brand. And so, we feel really good about those commercial synergies that we will continue to further develop as the market expands.
And you noted aftermarket. I mean, we've seen in terms of your margin profile, and some of it is without doubt, and you could talk about this a little bit, Carl Starr's strong aftermarket positioning, which seems to have held up better in a weaker economic environment.
Absolutely. I think yes, in the last year we can say what you just said. That's 100% true. But I'm gonna go back in time a little bit. I've been at Titan 15 years, and one of the weaknesses Titan has had is that as I look back to the legacy Titan years, is that our aftermarket presence wasn't as strong as it could be. And so whether it's in a lot of cases, investors will look at us and say, look, I don't want to necessarily be tied to a business at the time that was doing 20, 25% aftermarket. And so yes, we have really catapulted that aftermarket expansion with Carl Starr, as we talked about, and you just illustrated with the one-stop shop. But even it's really been a journey even before that. As I break down how we've been able to prove our aftermarket presence, it started with LSW,
Yeah.
really building the connection to the farmers. And that took our tire business that at the time was about 35% aftermarket. We've grown that up to 50. I look at our undercarriage business. We've created a connection to the end user through additional technology. that has in the aftermarket mining, as I mentioned earlier, with the foundry we have. And so we've taken that business from legacy where it was to higher, about a 10-15% higher aftermarket share. So as a company, our aftermarket business is getting really close to the size of our OEM business. And that's a
Okay.
profile that uh, obviously investors pointed out the obvious, to me 10-12 years ago, that we needed to improve it. But I think
Yeah.
internally we all know the benefits of it, the stability that it brings, the higher margin profile, and really just that deeper connection to the entire market. We
Yeah.
really feel like as a company we're connected to everything that's going on, which is ultimately through the end user, because of our technical background, our products, but also because we have a much higher aftermarket presence now than we did.
Talk a little bit about that because that's something I know you guys have highlighted where you are as a company now versus the last downturn. Your margins are clearly much better, and your balance sheet is in far better shape.
It's a good point. Also, think of how bad the ag markets have been for the last 18 months.
Yeah.
The in prior cycles when the ag markets had reached this level, I mean, Titan's balance sheet started to take a few hits, and our margins took a lot of blows. And I think you look at our results last year, still generating healthy margins, still producing good cash flow, and really having a business that is it's not saying it can, but is getting through a very, very difficult market. So
Yeah.
I look at how we did last year. I look at where we're positioned this year, and how it portrays itself into the future. It's a really good position to be in compared to some of the prior cycles that Titan has been. So if you look at the legacy Titan financial statements, I do believe there is a different company now. And I think last year is a strong support for that statement than what it was in some prior cycles.
How do you think about utilizing the balance sheet now? You made a very large acquisition.
Yeah.
You generated a lot of cash last year. Your balance sheet's still pretty healthy. You did buy back some stock in the second half of the year. How do you think about the use of the balance sheet going forward?
We did buy back a lot of stock last year with an opportunity that presented itself. It was a very healthy transaction for both parties. But without diving into that and kind of looking at the balance sheet going forward, I do think we need to use the balance sheet. We got to protect the balance sheet. Let me start
Yeah.
there. We have to protect the balance sheet. I think David, Tony, and the team have done a really good job doing that. But how I look at it is we also have a balance sheet that is positioned for expanding opportunities when those opportunities present themselves. And so maybe right now it wouldn't be through a large scale acquisition like we did last year. But going back to what we were talking about earlier with our brand, with our distribution, there are a lot of opportunities for us to work with companies. And that may be more through joint ventures, partnerships, different forms of a relationship, which we do have experience doing. Without getting into details, I have a couple of them that we are part of our company now that are kind of behind the scenes, which is good. I mean, I think for us, if we can get into products and geography and capabilities that we don't have, and we can do it in a less capital intensive way, that's the benefits of these joint ventures and partnerships that we've utilized in the past. And I think our balance sheet is certainly strong enough to do that, and people in the market recognize that. So I think those conversations will continue.
Okay. Talk to me about your efforts in product development. You touched on LSW, which has been a very big one for you that started slow and then has ramped up now over the last couple of years. How important is product development for Titan today?
I view it's got to be our heartbeat.
Okay.
And it has been. I've even used that in presentations to the board where our brand and our product development is our heartbeat. It's an old analogy that I picked up a long time ago when I was in grad school, and I think it's very appropriate. If in this particular sector, as equipment changes, generally grows bigger, as application needs and demands shift with that, we have to be producing the products that meet the needs of those end users. And in some cases, we
Okay.
got to be out ahead of them, producing products that they don't even know they need yet. I think we've done
Yeah.
a good job with that, but product development is not something you can say I've done a good job in the past. You got to continue to do it. And so
Yeah.
every conversation we have is we will continue to invest in product development. We got to make sure it starts with people. You got to have the right people internally that understand the market and can develop those products. We have, and we will continue to invest in all facets related to product development. I was referencing having a call with my Brazilian team this morning. We talked about it this morning. We have some great things going on, some new demands within Argentina with some shifts in the marketplace that are going to put some strain on our product development team. I said, okay, guys, can you do everything we wanted to do to grow an OTR, meet these new demands and needs? And they said yes. And so there's got to be that alignment between upper management and our balance sheet to say we will continue to we are going to support it. And then they got to have the resources in place to do that. And I think it's an expectation that we have for all our business units. If you're not developing new products, you're not really doing what your job entails. And so we've done a good job. It's taken a lot of years to build that. It's easy to say now. It's taken a lot of years to kind of build that culture, but something I
Okay.
feel is firmly in place here.
I wanted to ask because you mentioned this on the last earnings call, and it was wanted to dig a little bit deeper into third-party sourcing and the potential benefits. A little more clarity around that topic.
Yeah, I mean, it's something that we had been doing at Titan, and through the
Okay.
Carlstar acquisition, realized we can get better at it.
Okay.
Um, Meaning they had deeper connections with the third parties, but they also had a much better internal resources to develop those connections. And so we sit there going, wait a minute, if they can do that with their footprint,
Yep.
then we take Titan's footprint and our distributions of the channels of the two combined companies. We have a tremendous opportunity where if there's a third party opportunity, we need to be exploring that. And we now have the resources to go do that. So going back to what I said earlier, a year later, we've had to restructure our teams. And that's a situation where, quite frankly, the Carlstar team took the lead in that area, and the
Okay.
Titan team had to take the back seat and kind of restructure. But I would say on both sides, both the legacy Titan and Carlstar, we had established the cultures internally to eliminate that resistance towards third parties. So let's just start there. If you have internal resistance towards something like third party manufacturing, you got big problems. And so I think the
Okay.
key is the way we're able to take the two companies, combine them, and run is because both companies had progressed far enough to get rid of that internal resistance. And so if you ask our sales team, you ask our engineering teams, you ask our operational teams, are they in favor of what we're doing with third party manufacturing? And the consensus will be yes. And so
Okay.
that's a big element. So we're not fighting ourselves.
Okay. Fair enough. Do have a question from an investor. It's the topic through the entire earnings season and the topic certainly throughout this whole conference, which was tariffs. Got to ask about how Titan's positioned, and we don't know what they're changing daily or weekly, but what you're doing to position and what the risks would be with and potentially benefits for a domestic supplier.
I think putting the emphasis on the importance of manufacturing is a good thing.
Okay.
So let's kind of start there with the root of the message that's coming from the administration. I believe, and I think most people at Titan, or if not all people at Titan, would support the fact that just putting emphasis on manufacturing in developed countries is a good thing. And I'll say that on behalf
Okay.
of Europe and the US with that comment. The tariffs themselves, I would point to the past to kind of answer that question of why we think they're a good thing for Titan is because chaos has been good for Titan in the past. I'll point recently to the pandemic. The strength of our team, which we've been talking about extensively, the strength of our manufacturing footprint, the depth of our product portfolio is second to none. And the products we produce are important to some important customers,
Yep.
both in the OEM, which are the obvious ones I could state, but also in the aftermarket. There's a lot of really good aftermarket businesses that rely on our products. And so when things get chaotic,
Yeah.
that's when we can shine. And again, I think that's been our history and it's built into our DNA of a company. But I would use the pandemic and even the post pandemic. That was not an easy period either. We've done a good job taking care of our customers, and so I point to that. Now, answering your question specifically about what the tariffs mean, it's difficult in the short term to tell you that, but I would say the impact has been something that we can manage, and there
Okay.
hasn't been anything that's kind of thrown us off kilter. Certainly, like every company that you've talked to, that I've talked to, the uncertainty is not a lot of fun.
Yeah.
It's not easy waking up every day going, I'm not sure what's going to happen. Uh, but again, I think in the short term, we're well positioned to get through it. We have the ability to make quick decisions and react. Have the ability, if needed, to move manufacturing. We have the ability to move supply chains. You don't want to make quick, rash decisions because that's spending money. And if things are going to stabilize in a shorter period,
Right.
you don't want to run around and have 50 balls bouncing at the same time on top of what the administration's throwing at everybody. So there is a pause period where you do your assessments of what's going on with the administration, where things are going. But we do feel like there's a lot of levers we can continue to pull beyond what we've already been doing.
I guess the big one I get asked about by investors is obviously Carl Star has the big China facility. Is the ability to ramp up more production here if necessary?
Yeah, we do. We that's where Titan is uniquely positioned. So if you take what legacy Carl Star was, they had positioned themselves in the marketplace as having an extremely strong footprint in Asia with that Chinese manufacturing you reference. It is a great plant. They do a wonderful job. But they had some redundancy that they could bring back to the US. And they were
Okay.
executing on some of that, meaning some of the products made in China are also made in the US. Well, now consider that I'm trying to do some quick math in my head. We have now about 3 times the manufacturing capability in the US that Carl Star did.
Right.
And so just where I was the last couple of days in Des Moines has the ability to produce just about everything. And we've really put a lot of investment into our plants in the U.S., especially Des Moines, with a lot of automation, a lot of capabilities that give us the ability to shift and move production around and do different things. And so, again, do you want to make those decisions rashly? It's not easy to move production from the
Right.
standpoint you got to spend capital. But from the standpoint, if our customers said, "Look, we are so concerned about the administration and the Chinese tariffs, we feel like you got to do something," absolutely we can.
Okay.
And we have again, Carl started already positioned himself in the marketplace as a company that could do that.
Okay.
So just imagine now we have 2.5, 3x the
Yep.
capabilities as a combined company than we did before.
What's your ability to pass through costs?
I'm gonna knock on wood as I say this. So far, it's been good.
Okay.
I think the Chinese tariffs are a little more straightforward. These are subtle ones, but I prefer to give you an answer that's well rounded instead of just a short answer. I mean, the one that surprises us a little bit is some of the smaller components of your supply chain that we buy from Canada. Uh,
Right.
we
Right.
never looked at Canada as being an import, to be honest with you. It's kind of off our
Right.
radar. And so they've come to me and said, "Look, this we're going to have to spend some money on tariffs related to some smaller items that we're buying from Canada." And I said, "Well, I'm not going to bail on the Canadian supplier that's been a long-term supplier because of the current tariffs that the administration is putting into Canada. So I'm willing to wait that one out and see where that one goes." And so those costs are less than $1 million. I'm not talking about big money here.
Right. Right.
But it's more of just a surprise where I think a lot of people are going, wow, yeah, I guess Canada is an import now because the administration looks at it as an import. So
Right.
other than that, no, I think the rest of the marketplace understands that, the products we have a lot of room between the current tariff levels and
Okay.
the cost of producing domestically versus China, that the current tariff levels don't change the algorithm I was talking about, where we feel like we got to start moving production back to the U.S. at this point.
You talked about how Titan can do very well in periods of chaos, and you noted COVID and post-COVID. Of my entire coverage universe, nobody was able to ramp up faster and more efficiently coming out of that than Titan. And some of it is the complexity of what you make, but some of it was your ability to ramp up very quickly, get labor trained. If we get a faster recovery, is Titan as well positioned this time as you clearly showed the last time to benefit from the bounce?
The message I've been given to the team is the answer needs to be yes. And so if you look at our financials last year, again, it was strong performance and all the things we already talked about. Hidden within the performance last year is we didn't cut to the bone.
Yeah.
What you can't forget about some of the manufacturing we do, and you've been to our plants to understand this, tire manufacturing is not just pouring rubber into a mold. A tire is built and constructed, and there's a lot of skilled labor there. And so Tighten across the board. I told our team, do not cut to the bone. Do not cut skilled personnel, because when the market improves, and it's not a matter of if, it's when it
Right.
improves, our customers are going to expect us, because of our product portfolio and our capabilities, to be able to run with them. And we're probably not going to get this ramp up period where they give us 12 months and say, "Oh, go ahead and take your time, build up your capabilities." And so That question, Steve, is what I've laid out as the expectation for the team. Be prepared.
Okay.
So do not cut to the bone last year to improve your bonus and get rid of skilled labor. That when I come to you this year and say it's time to run, and you look at me and
Yeah.
say I'm not ready to run. So we have good skilled people that in place, but also we've been fortunate we can flex hours, and so
Okay.
we have available hours in our current workforce, and then we have overtime hours as well. So when you start taking the combination of the two, we
Yeah.
feel like we can handle a pretty substantial increase in the in the required demands from our customers with our current labor force, which also means
Okay.
we're going to get better utilization, better efficiency,
Right.
and not have to start bringing in all the training liability of new people. So I do think when that time comes, we will be ready, but also to really help improve our financial performance because we can do it with existing labor.
It's been a remarkably fast half hour. Hope everyone watching thinks so as well. Before we wrap it up, we covered a lot of ground. Anything we didn't want to touch on or any closing comments you want to leave folks with?
I think thanks, Steve. You touched on all the key points of who we are as a company and the current hot topics in our industry and obviously amongst the administration. So appreciate the good lines of questions and the chance to spend a quick half an hour with you and thank you for participating in this conference.
Okay. Thanks so much, Paul Wrights, Titan International President and CEO. Thanks, Paul. Thanks, everyone, for joining us.
Thanks,
See you
Steve.
tomorrow at day 2 of